Boys and girls, we got a session tonight. Oh man, I am hot right now. I am in a great mood. Let me fix this thing. This is going to be the most important video I've ever posted, the most important next 2 to 3 weeks that I've ever covered on the stock. I want to get really quickly, I want to talk about SPY, AMC, and Bed Bath & Beyond. I want to give you guys some quick updates on how I see the next few weeks playing out. Everything is coordinated. Everything is looking amazing right now. I spoke with a few guys over the weekend, Astro, Nick Leeson, Orlando. I talked to Avi quick as well, and you know, and my boy Joey Gons. Joey is actually in my fraternity at Montclair State in Jersey. So shout out to Joey. He helped me a lot this weekend. We went over things and basically figured out what's going to happen next. So since November, I've been posting this thesis that we're going to have a meme rally that will coordinate with the top of the S&P market before we take a dump. We thought it was more in the April region at the time. It got extended, had it more out to May. It was extended again, and now I see the top actually being right before July OPEX, which is Friday the 21st, for the big squeeze up to, you know, that $11 range. But it seems like they're just repeating that action in the near term as well, and they're going to do the same thing here. So I just want to take you guys really quick through the three charts, and I just spent like 4 hours just really dicing up and drawing things so I can make it as clear as possible for you guys to see. So I just want to go through real quick, and let's start with the S&P. Let's start with the S&P 500. Okay, so this is the chart that I have been posting for SPY for the last 2 weeks. The new orange trend is what we're looking at right now, but the timing is starting to get to a really close, crucial period, especially with FOMC coming up on the 3rd, and then you have CPI, which was actually moved up to the 10th. I know it's usually on the 12th or 13th of the month. So I fully expect the S&P 500 to top before CPI. I originally kind of thought they were going to run it right into FOMC and then dump it after. But I don't know. I don't know right now. It's kind of still early to tell. Could they do that? Technically, yes. I think CPI is more of a better mark. You know, they don't from a narrative perspective, they do not like having bad FOMC days with the S&P. Like 9 out of 10 FOMCs, SPY loves to run, or at least, you know, show some type of serious strength for the time being. Because you got to remember, like, a lot of eyes are on Powell globally. So the American stock market needs to appear reliable. It needs to appear like everything is okay. They're not going to do anything extreme and castrate the market on like an FOMC day or the day after. So this is the chart that I have right now. I have a ton of indicators and kind of reasons why I drew the line like this. But to kind of keep it straightforward, there are specific fib levels that I have taken on the macro that have shown me why these could be the top end retracement points. I'll take one really quick just to show you guys. I still expect this week for us to go down to 408 before we blast off. I know 406.75 I think is some strong fib support, but I definitely want to see that 420 to 422 level before we make a move. And if you take the fibs right down to 408, that's where you get basically the 786 is right in that spot. But SPY looks absolutely great. Like we said, you know, I expect a absolute summer blast into 4th of July, and for it not to stop, leading all the way into OPEX. Speaking with Orlando, right now the chain is absolutely loaded, with puts going out into May 19th and to June OPEX, which is Friday the 16th. Expect downward action after we top at that 420, 422 range. Also, I think this is the exact spot where you're going to get your AMC and Bed Bath & Beyond moves. I will get to that in a minute. Very exciting news about that. I'm super happy to talk about. But yeah, this is how you can see it. If you guys have any questions about this, just hit me in the chat. Let's go to AMC really quick. Now I know I posted this chart and it's messy. It's messy for a reason, because there are multiple retracement levels and multiple possible targets using the VRVP, using fibs, using trajectory lines and trend lines, things of that nature to find these targets. But you got to remember that the VRVP levels, these volume shelves, are what command these algorithms. Now, volume shelves and percentage moves based on liquidity is how we dictate where they're going to squeeze to, where they're going to retrace. It's usually a similar squeeze percentage move. It's usually based on the current fractal that it's running. It's usually a similar retracement move based on the current fractal that it's running. Let me just quickly break this down in layman's terms so I can show you guys the fractal that I had, that I've been showing you. It's currently running a copy of this. We have talked about this probably 20 times over the last, whatever, call it 5 months. Once it creates this fractal and algorithmic pattern and it repeats itself, you have to measure it from the spot that it first created it, right? So, which is right here. Okay? And this lines up just ever so perfectly with the run that we're expecting leading up into earnings. Right? Okay? Now, if the S&P top is going to be mid-July, okay, let's move this over right into the spot where this fractal sequence was created. And there you go. Right? Mid-July, right into OPEX. Fib levels and the 30 other indicators that I use, it's not going to get more simple than this to understand, okay? So let's go back to the AMC chart and the one that I posted with you guys this previous week. Now, again, I understand there's a lot of lines, but a lot of places that we can possibly stop. What makes this fractal so interesting that we're running in, right, which is this one, because it's extended, it's basically running this over and over again, here, 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 and it will again one more time here. It even did it here. It's the same exact fractal, okay? It's just shrunk or it's expanded. It just depends on the size and how much liquidity it has at that moment in time to make the moves that we're expecting. So let's talk quickly about narrative. Now, what happens this Tuesday that they just so nicely moved up for us? That was the court hearing. So the court hearing is now Tuesday, April 25th, okay? I'm talking to Nick Leeson over the weekend and my boy Joey Gons, and we know that the algorithm loves to throw fake outs, okay? Look what it did here, okay? How many times did I post when we were in this area? We were in this area and I told you guys, I said, we're going to have to break the fractal sequencing to make it appear to bears from a technical analysis standpoint that we broke support, and that support was at that 380 level. And where did the stock go in extended hours when that news came out after hours? Right to 364. Okay? Here's your support, 380, and it went right below it. That was your technical signal. That's what we were waiting for. And right after that, boom, explosion right off the bottom, ripped right out of that pocket. Okay? So we know right now that this algorithm is trapped. It can wiggle as much as it wants, but the bottom line is it's not getting out of this move. So I fully expect them to run the same exact tactic when this court case comes out. Anyone buying calls or weeklies, I'm going to let you know we're going to get hit on Tuesday, and we're going to get hit hard right down to the golden pocket if you take it from 364, where the fractal bottomed in after hours, to the top of the next climax. Your golden pocket is 433. Okay, that's also the bottom of this volume shelf. That is where I want to buy. Okay, that is where I want to buy. I want to see this happen either Tuesday, the day of, or sometime bleeding into Wednesday. Maybe they even extend it to Thursday. But Nick Leeson and I, and Joey, we fully expect a dip right before the rip. okay, to fake everyone out yet again. Because if they take it to this point, okay, I mean, I don't want to say it's not possible, but they maybe could actually take it down to 401 as well. There's a huge gap here. But you know when AMC runs these fractal sequencing, they use the gap as baits. They use the gap as bait because they love to use it as a technical signal to incite bears to load up on puts and retail as well. So most of the time when you see gaps at crucial areas of inflection and confluence, it's usually bait. So I don't expect this gap to fill. Maybe they half fill it, and instead of 433, you get the 707 at 416. That's a very likely possibility. And in that case, we'll have to change our measurements, things like that, for how high the rip is going to be, because we know the percentage moves are going to be the same. Now, the latest rip that we had was 94%. Okay? So the next one I expect can be any distance. It can be any distance of these three. So 94% was this one, 45% was this one, and I usually like taking it from the bottom or the breakout zone, but just from the bottom, 73%, and from the breakout, it was 60%. So you're looking anywhere from 40 to 94% as your move, okay? That is why I have so many price targets, because it can stop at any one of these. Now, how do we narrow it down, okay? The trajectory lines, these are the same angles that AMC has ran, and if you look at Mr. Booksy's stream, he could talk about this a little, but I know this is something I was talking about with Patrick Kipling the other day, something that, kind of came to our attention that maybe we didn't notice before, but the after hours move, that bottom that at 364, taking the trajectory lines from there, that's usually where the next top is going to be, okay? You can also, just generally looking at the macro fib lines, the 711 is the 786. I mean, that's where I got it. You know what I'm saying? Like, that's where I see it going. I think we're definitely going to, so $6 is a psychological level, and there's a lot of call and put activity at that level as well. I definitely think they're going to take it above 6 from a psychological standpoint, just to make people think it's going to 7 right away, and then they're going to rip it downward afterwards, and then we'll have a final blow off top. So I see two moves here, not one blast. I see two. I see like a half blast and then a retracement, and then it'll finish after. So let's look at these dates really quick. What comes on May 5th? AMC earnings, and they love to short it after earnings, right? The IV spikes right into earnings. That's where you want to take your profit. If AMC is 630 on May 4th, I'm out. I'm out completely, because the IV is going to be high, and my options, especially if we buy this dip at 430, 416, you go 416 to 630. I mean, guys, you're talking, come on, man. It's a 50% rip. You're talking 170+% in an option, especially if you're doing a $6, a little bit out of the money. That IV is going to go nuts. So that is where you'd want to take profit, okay? And then you wait to see what happens after earnings. If it does a retracement, there's plenty of volume shelves here, right? And then you get your next blow off top the next week. Let's talk quick about OPEX. Where is... Thinkorswim. Okay, let's talk quick about OPEX. Leading all the way out into the 19th. Okay? That is where you see all the pressure. Okay? The chain is not really that heavy leading up to earnings. It is. Okay? But you know that that's what they want, right? They want you to load up to earnings. They want you to try to hold through it and yada yada. They don't want all of these calls ending up in the money. Okay? So that is why, I mean, look at this thing, it's stacked all the way up to $10, right? You have a ton of calls. So they want that money. Okay? Do not expect this thing to go higher than 6 in the earnings. I see 630 maybe really quick, but once we get to 630, it's going to be a quick top, and they're going to retrace it fast. So you're going to get people buying all these options even more. They're going to load up once they see it ripping, and they're going to pull it right back, probably to that 550 level. You know what I'm saying? Like that's where they want it. They want to keep it low. So first rip up to 630, retracement after earnings, and then look at this week really quick. Just look at this week. Okay? This chain on the call side is completely dry. This ain't shit. Okay? Okay, so let's look at the chain real quick on the put side, right? Look at May 19th. Look at May 19th. Look how loaded the put side is. All in the money. These are all in the money, right? On the put side, they're in the money. On the call side, they're out of the money because we're talking about a 13 strike, right? On the put side, super, super heavy delta pressure all the way. I mean, look, 108,000, 57,000. This isn't retail buying. 48,000 at the 5 strike, right? They, by May OPEX, they do not want this stock above these levels, okay? Let's talk about this just from an option standpoint. Institutions, okay? They have puts. They're in the money, okay? Way out. The market makers, the dealers, are writing those puts to them. So the market makers are technically long, right? They're technically long. They can't be long because they want to be delta neutral at all times. So they short the underlying stock to offset that risk. Now, if AMC starts, staying in a pattern where it's bullish, okay, and you get a lot of gamma exposure also, look on the call side, leading up to May OPEX, that's going to push the price up, and the market maker has to stay delta neutral. So then they have to cover their shorts, the market maker, and by purchasing the underlying stock, that's what pushes it up. It's not retail doing it. It's the market maker delta hedging, okay? I know it's confusing. I can talk about it in another video, but for now, I just want to be concise to the point. That is why the May 19th chain is loaded to the gills, okay? You get all the gamma exposure here. You have all the hedging, delta hedging on the put side going on over here. And the May 12th chain looks completely dry. I mean, look at these numbers. They're terrible on the call side. There's no gamma here, right? So this is why, okay, I believe we are going to run up until May 12th because of how dry this is. It's misdirection. They're not just going to put all these calls out until May 19th and run it the week of May 19th. It makes no sense. They want this money. So they are going to drop it. Run it May 12th, the week of May 12th, drop it afterwards into OPEX, and all this gets kept. Okay? I know that sounds confusing, okay? But if you think of it like a dealer, it makes a lot more sense. So that's where we're at with AMC right now. These are the possible price targets that I have and the possible routes that I have. Now, I added, after talking to Nick Leeson and doing some due diligence on Thinkorswim with hedge and call walls, he believes that we can actually take a serious move up to 8. So listen, when Amy gets going, she can do ridiculous things. It's not out of the question that we can hit these targets. I just personally think that, remember, I'm a conservative trader. I personally think that it's not the most likely scenario. I like on the 3 hour, you have the 510 EMA, which is my favorite. I like $7. I do. If we're gonna see 843, it's just a much bigger move. And while it is possible, I probably am not going to fully trade it. We go to 630 before earnings and we get that IV spike again. I'm taking big time profit. If we retrace to these levels that we see, first I want to see if it goes to 630. But depending on where the retracement is, whether it's right here, 568 at this VRVP level, or a little further back, let's take fibs just in case. Let's pretend like this is the bottom. And let's see where the fib would be. The 0.5 is at 550. Bet that's probably where the retracement will be. It'll probably be 550. Probably the bottom of this VRVP level. So the red route looks, dead on accurate for what I want to see. And then you get that blast off right. Here's May 12th, the week of May 12th, right before CPI, which is May 10th. So that move's going to have to happen before CPI. I firmly believe that CPI is going to come in hot this time because it's they keep manipulating the numbers and data points to make it appear like inflation's going down, but it's not like the real core CPI levels. Like inflation's crazy right now. They do this for a narrative perspective, so don't always believe what you see when those numbers come out. It's just an excuse to make the market go higher. So here you got it. This is what I want to see from AMC. Big dip by the court case. This is where I'm going to be loading up. I'm going to be buying as many May 19th calls as possible at 5 strike. Remember, I'm a conservative trader. I want to keep it something, in the realm of realism before we see our big pullback into mid-June to that 350 level. So 630 is our first jump. I want to see a retracement. I want to see a blast off to one of these levels. I personally like 7. Is there a chance we can go to 840? Yes. It's risky. You play based on your risk tolerance and your financial situation. I can't make a comment on that, but you know what my strategy is, and we're going to take things from there. After this rip, I want to see a big 50 to 55% pullback. That is the percentage pullbacks that we've been getting on this near-term fractal right here that we've been running. Let me take it from here so you guys can understand. 55% right in the liquid zone in the middle area. That's exactly what I want to see here because it's the same fractal. It's just extended. Okay, so let's say, for shits and giggles, we actually do see 843. What I said, I wanted a 350 retracement. Here's your 55%, 370 on the money. Okay, so Amy looks amazing. I am ecstatic right now. We are going to absolutely kill this move no matter what. It's damn near impossible not to make money on it. We nailed this sucker down big time. And there is a ton of TA that I have that I'm just not showing you guys at the moment. It's just too much to go over. I want to keep it simple. Here's the chart I'm going to be posting, and let's move on to Bed Bath & Beyond. Okay, BBBY. In similar fashion, I talked about this with my boy Joey Gons over the weekend. I believe Bed Bath & Beyond, and I talked about this on Friday, was going to break structure just like AMC did past that. When AMC did it was 380 support and it broke down to 364, right? Giving the signal for bears to go short. I believe they're going to do the same thing with Bed Bath & Beyond, just to a more epic fashion because Bed Bath & Beyond's moves are crazy. However, the IV on Bed Bath & Beyond is much higher, so the options are less lucrative. Remember, the VIX is at a huge low. I think it's 17 right now. So that is why the options on AMC are so cheap. AMC is the play right now. While Bed Bath & Beyond is going to make a bigger move, I'll be playing both just for the hell of it, but I still am going to be loading majority-wise with Amy. But let's look at BBBY's chart. This is what I want to see. So it's been making 70% retracements. AMC is 55. Bed Bath & Beyond's fractal that it's currently running is more on the 70 side. Now, I'm really spitballing here based on fibs only because there are no volume shelves here whatsoever below this level. This is all just air below here. So it's a lot harder to measure where we're going to go. The only thing that we have right now is percentage moves, fibs, and really trend lines and EMAs as well. Those are the things that I like the most. I know I have the sniper up here too. I had some things I'll show you guys later on in the week regarding that. But we talked about on Friday, me and Joey Gons, about breaking structure. And he basically said, he's like, listen, the only way we're going to break structure, like I believed, with a move that, drastic, is if they put bankruptcy news out over the weekend. And bankruptcy news today, baby. Let's go. Oh my God, you're gonna see Monday this thing down here. I took some fibs, just trying to game it. I like 20 cents, 18 to 20 cents is what I like. Could they take it to 16? Sure, but that is your load zone. The same with AMC. When AMC's news comes out on Tuesday, you're gonna see Bed Bath & Beyond at its low as well. That is when you load up. And AMC and Bed Bath & Beyond should have their blow off top moves the same week, which is the week of May 12th. I'd be in absolute shock if it went to May 19th. I'd be in absolute shock because Bed Bath & Beyond just squeezed during April OPEX week. So, stock market, doesn't repeat, but it rhymes. They're not going to run it again in OPEX week. It's too obvious. So I believe it'll be the week before, and that 70, where's that volume show? That 76 to 78 cents is my target. We go anywhere near 70 cents, you get out of that trade completely because the S&P is going to top during that time at 422, like we talked about, and then you'll have your next retracement on Bed Bath & Beyond. I saw today too about GameStop and Ryan Cohen, something about a possible leverage buyout with Bed Bath & Beyond. You want a narrative for a July squeeze, something absurd like 1,500%, because Bed Bath & Beyond does that and hasn't done it in a while. Homeboy, you got it right there. This is what it would look like, and I drew this up as nicely as I could, which just, if I'm correct about this bottom, that 18 and 20 cents bottom, and you take the macro fibs on the 30-year chart, this is what you got. 350, 337, and 358 is the golden pocket. That is a 1,400% move. Bed Bath & Beyond has done that before. Leverage buyout, narrative, that's what I want to see. Okay? So we look amazing. I could not be more excited right now because, guys, even if you're a small time, retail trader and you're trading with $5,000 or something like that, you have an opportunity here to make hundreds of thousands of dollars and to completely change your family's life. Okay? That's what I want for you. That is why we're doing all this. That is why we're posting these videos for free. I don't give a shit. I'm not charging you for a Discord or anything like that. Sam and I are in the process of starting a big time company, and I'll talk about that very soon. But for the last 6 months, I posted nothing but TA for free. And have I been wrong? Sure. But 70% of the time, I've been right. And I have been always a step ahead of this damn thing. Always. I was talking about the blow-off top squeeze in November before anyone else had it. And my timing was off. But, guys, it's happening right before our eyes, too. And if I'm right about this, I'm right about what's going to come next year. So, listen, everyone should be very happy. Hit me with questions. Let's get after this thing. We're going to have a monster week. Everyone should be super happy. I hope you guys absolutely crush it. Huge weeks ahead. Huge weeks. Huge weeks. Stick with me. I promise you I will bring you to the homeland. Let's knock this thing out the absolute park. I am going to be all over this all week, posting consistently. Make sure you have post notifications turned on. If anything drastic happens, I'll put out another video, but we look absolutely gorgeous right now. Let's kill this thing. All right, any questions you guys got, hit me in the chat. I love you all, and let's fucking get it.